Hello everybody. So this video is entitled Mara, buy for the Bitcoin, stay for the free stuff. This summarizes my thesis on Mara. Of course, Mara reported its earnings yesterday. Typically, earnings on Bitcoin miners are not really price-moving factors. It's more linked to Bitcoin and their operations. These companies mine pretty predictably, so there's not a lot of surprises. Although there was a tiny surprise in a perhaps better number than expected and more profit explosion. And of course, this has to do with the changes in accounting. But even that didn't move the stock price much. It's moving in line with the rest of crypto, kind of crypto treasury companies and other crypto proxies. There was a big sell-off yesterday. We're bouncing back today, even though Bitcoin itself is still kind of down. And, I took these screenshots before the Fed meeting, the Fed speech. So who knows what's going to be said during the Fed speech, which should be going on as I record this. Anyways, bigger deals for Mara. They keep expanding. While some miners have kind of stalled expansion or stopped, they keep expanding and noting that, they have a contract to buy newer, more efficient miners, and they need to pay 150 million for them. So they keep expanding. And actually, I've noted that the efficiency of their mining fleet has been markedly improved compared to 12 months ago. So I'm going to have to change my tune when I say this company has old miners. That's less and less the case. It still doesn't have anything as efficient as a whole as, say, iron, but I much prefer have something a little less efficient and a hodl bag than no hodl bag. They hodl. They are big hodlers of Bitcoin, they're expanding their energy access. They're getting access to more and more energy. Mara's strategy as a whole, as a Bitcoin miner, is to focus more on the low cost of energy, focus less on the efficiency or the recency of the fleet. They're a cheap energy focused miner and not a energy cost agnostic miner where you're going to try to just get the most efficient miner. So, and of course it's a balance of both, but their fleet has gotten better and it's quite impressive. If you look at the fleet, it was almost 25 joules per terahash. It's now at 18 joules per terahash. A lot of the state-of-the-art miners today, you're going to be looking for something less than 15 joules. So we're not that far off. Kudos to them. They did pretty well on increasing the efficiency. This is their power access. This shows their power access. They're hoping to have 1.7 potentially total power access, 1.7 gigawatt. So again, given that you get all this for free, that's pretty darn impressive because remember, this stock is trading at a 1.01 price to NAV. So the 98% of the value of Mara can be explained by the Bitcoin. And if you buy it right, you can buy it on days where it's like 101% of the value of Mara. That's just explained by the Bitcoin. So keep in mind, you get all of this for free. You get 75 terahash for free. You get the efficient mining fleet for free. You get that energy access, that power access for free, and that's included in your price. You get a high growth company. Mara, of course they've benefited with the spike in the Bitcoin price, but if you look at how they recognize revenue increased 64% year over year. So that's also pretty darn good. Adjusted EBITDA is an all-time high at 1.2 billion adjusted EBITDA. So this company, and they just finished, of course, their July 2025 convertible note. They're going to use a token amount, something like 50 million of that to retire an old debt, but much, if not most of that note is going to go to buy Bitcoin. And this is a hodling company. They are a company that hodls Bitcoin, that don't sell Bitcoin. They don't do what CleanSpark did when they started selling the Bitcoin, just to fund their operations. Mara does not cater to Wall Street's request. It does what they think is best for the business, and I think, I agree with them. Hodling the Bitcoin is best for the business. It's a little riskier, and a reason for the stock to perhaps be a little cheaper is the fact that they monetize their stack, right? They monetize their Bitcoin stack, so they lend the Bitcoin and they earn a yield on the lending of the Bitcoin. And so it's financial institutions. Typically, they use this Bitcoin to write covered calls, write puts, to do derivatives. If you hold a bunch of Bitcoin, you can use that to do derivatives income. And so they have 31% of your Bitcoin bag that's going to derivatives income. Some some people may think that this is a little riskier. It definitely is riskier than not lending it. But then again, they claim to have very good hedge fund relationships, and I personally think we are slowly entering into this era where lending Bitcoin is slowly becoming more okay. And note, they don't do it for the whole bag. They only do it for 31% of the bag. I have to believe that they trust the parties with whom they do that, and they generate a yield. Note, they're not the only ones who do that, right? Metaplanet does the same thing. They write puts whenever they want to buy Bitcoin. Again, slightly different, but the use of derivatives to grow the bag is going to be more and more common. And, if you buy Mara, you're definitely more okay with risk, right? The blue chip is MicroStrategy in the sector. MicroStrategy is always going to stay the blue chip in the sector. They're never lending the Bitcoin. But if you're looking for a diversified risk curve and you want to go out of a risk curve, I don't have a problem with them trying to earn a little extra yield on that 31%. And as long as they segregate the funds really, really well, they should be okay. Of course, the one risk is like a binary risk. What if they lose like 100 Bitcoin? Well, if they would have to disclose that in 8K, and if they did, the stock would probably just drop a crazy amount. And so I hope they're mindful of overreactions in how they manage their Bitcoin bag. Anyways, you also get this wind farm. You get this 139 megawatt wind farm. Their key, of course, is dispatchable power. So because the power of a wind farm is going to be next to nothing, just maintenance costs, something like 1 cent a watt, they can plug in the oldest miners on the wind farm, and whenever there's power, whenever the wind is blowing, you mine. There's no wind, you don't mind. And so in this case, it's actually pretty efficacious for Mara, because wind is kind of a day and night thing, right? Wind can be here for entire seasons, and so they're happy with this wind generation asset. Anyways, that's just the way it is. And let's conclude with an important point here. So people are upset about the dilution. People are always upset about the dilution. The point is, how do you finance the mining operations, right? How do you finance, because you see they mine a bunch of Bitcoin, but you see you have that electric bill, right? For energy cost is $33,700 per Bitcoin. And keep in mind, most of our miners have been bought, paid for, and depreciated. So that's why we're focusing on the energy cost here. $33,000 for each Bitcoin that you mine, and they mine a lot of Bitcoin, right? So how do you pay for that? How do you pay for 33,000? Well, to me, it makes the most sense to sell shares, because if you think about, you're mining a Bitcoin for 33K, Bitcoin is at 117K, right? So 33, 117, what's your price to NAV on that? Your price to NAV on that is actually a 4. So yeah, you're selling shares at a 1x price to NAV, sure. But since you take that money not to buy Bitcoin outright, you take that money to spend on the electric bill. You take that money to turn, 33,000 into 117,000. So it is still accretive for them to do that, because they mine the Bitcoin, because their cost per Bitcoin is much lower than, say, Michael Saylor, who has to buy it out on the open market. Anyways, the market really has to come around on this story and realize that this miner is too cheap. It's just too cheap. This miner is just too cheap. And keep in mind, Mara is the older miner. It's the elite. It's always been the number one miner. It's every wave of investors has a reason to hate Mara. The few months ago, people didn't like Mara because they printed some image on the blockchain. And they were like, oh, he's not supporting Bitcoin knots, and he's not supporting the network. So they got a lot of flack for that. That was the end of last year. Today, I saw online some biased clickbaity article telling, oh, the CEO of Mara makes more than the CEO of NVIDIA. Well, yeah, that's if you take some like union data who compares CEO pay compared to size metrics of the company or something like that. Anyways, a lot of people will say, I don't want to buy Mara because the CEO makes too much money. Well, first of all, $43 million what the CEO appears to make. That's 0.007% of the market cap. So is that enough to kill the investment? In my view, it's not enough to kill the investment. I don't get my feelings get in the way of investment decision. CEO pay doesn't get in the way of my investment decision. I think good for him. The CEO makes a bunch of money. Good for him. You know what I mean? Like sure, if you were a 150 million market cap company, I would be very upset with that because it would have an economic impact on the bottom line. But 43 million when you're a 6 billion company, that doesn't really have that big of an economic impact at all. So that doesn't bother me. It will bother me if at the end of the day this stock starts going bankrupt or something, or if they lose Bitcoin because they didn't securitize right, then yes, that will bother me. But right now, the jury is not out on any of the miners. We don't know what the terminal value of these miners is going to be. My guess is going to be much higher. And so if Mara doubles or triples, fewer and fewer people are going to be upset about the 43 million CEO pay. So it's all about perspective. But Mara is cheap, and it's cheap because it's perhaps the most hated Bitcoin miner. And I like cheap. And the conclusion of this video is Mara, you buy for the Bitcoin. $1 of Mara stock is worth about $1 of Bitcoin, and you get all of the stuff for free. You get all of the energy assets. You get almost 75 terahash. You get 1.7 gigawatt of power access. You get a wind farm. You get international operations. You get a lot. So and you get a Bitcoin treasury company because their convertible debt that they're issuing is to buy more Bitcoin. You get a BTC treasury company as well in Mara. It's an all-inclusive play, and I like it very much. But it's just for me. This is not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.